Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're jumping down into the world of Bitcoin, taking a look at what's been going on with the most recent price action and what I would expect to happen next. Now as I get into this video, if you find it useful and informative, hit the like button. I do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. Now if you have not yet joined us in Discord, the link is in the description down below. It's a fantastic community talking crypto 24/7. It's completely free and I don't think you'll be disappointed by what you find down there. So why not go ahead and check that out today? Okay guys, let's waste no more time though. Let's jump right down into this. So this is Bitcoin paired up with USDT on the hourly chart, and Binance is our data source. If you wanted to replicate this, that is the data settings that you're going to need. We are using TradingView as well. Okay, so basically, if I just zoom out a fraction here, we were talking about this kind of corrective pattern after having a fifth wave down low. This was basically 17,622. In yesterday's video, we had the discussion around whether or not the bottom is in, the indicators of the 10 and the 20 EMAs indicating some interesting stuff where they've crossed over. And obviously, looking and addressing the patterns that we're currently seeing here now. And obviously, I do feel that we're going down a little bit lower. And I think I had this marked out, which I can't see anymore, which was about 15,140 to 16,629. So basically just this little area here. And I'm going to grab hold of my rectangle and I'm just going to drop that in here. Okay, so this is kind of the area that I feel that we might actually come into. And I think this ABC structure up here is is basically a wave 4. So in fact, this wave 4 here, okay? Now, it is also possible that that becomes wave 4 and this becomes wave 5, which means that basically 17,622 is still possibly the bottom. However, as we kind of had this conversation yesterday, we did obviously talk about invalidations and also, this impulsive move to the downside that would have come in had we dropped down lower than $20,054.30. As you can see here in the last few hours, we've gone past that level, which basically does mean this is a 5-wave move to the downside. Now, as I say many times before, you cannot have, or you do not normally expect to see 5-wave move like this really micro movement just here in isolation. You tend to see that these things happen, along with a 5-3-5-3-5 structure. So for example, there's 5 waves just inside this little move here. 1, 2, up here, 3, 4, and 5, right? So you have this little 5 wave, and what they do is they make up a wave 1 before we have a wave 2 upwards, and then a wave 3, 4, right, and 5. So when we start seeing this, and this is actually a pretty deep kind of, first 5 waves, if that is in fact a wave 1, coming down here with a wave 2 bounce, then a wave 3, then 4, then 5, then we're probably going to come down lower than our original target. So it'll be interesting to kind of see how that one plays out. At the same time, this could just be a corrective pattern, and 17,622 is still the bottom. And what I mean by that is we might have a 5-wave move here. Okay, this will be followed up by a 3-wave move upwards, and then follow that with an additional 5-wave move down, and you do not cross 17,622. This essentially would make it an ABC, so an A, B, C, okay, and that is called a zigzag pattern commonly. And basically what that is a 5-3-5 structured move within Elliott wave theory. And I did see, I think I was a member yesterday talking about the differences between a W, X, Y, and an A, B, C. Both are 3-wave moves. I just tend to use ABCs for everything on YouTube, although technically that would not necessarily be true. Okay, so a WXY, for example, is a 3-wave corrective move. Normally, inside here, you would expect to see something like 3 waves here. You'd expect to see 3 waves here, and then you would expect to see 3 waves here. Okay, essentially it becomes a 3-3-3, and it's just a corrective pattern. Inside as an ABC, this usually has, and I say usually, a 5-3-5, for example. So you'd end up with 5 waves up, 3 waves down, 5 waves up. Alternatively, and I don't tend to use it for this purpose, but we can use it that way as well, is that you have 3 waves up, you then have 3 waves down, and then you have 5 waves ups. So essentially what we talk about here is a difference between a WXY and an ABC. Essentially is that an ABC should have a 5 wave count inside it, whereas an WXY should not. Okay, so when we start saying that we've got an ABC, you know, this here, for example, wouldn't technically be an ABC, but I use an ABC because it's still a 3 wave count. And I don't think people generally care whether or not you've got a 5 wave count inside your moves. But nonetheless, an ABC is technically a zigzag pattern or a pattern with a 5 wave move. So when we see 5, 3, 5 coming down, that would be an ABC. Now, here I can now get rid of our trigger points and all that kind of stuff we don't need, and we don't need that one. So this is kind of the minimum expectations, I guess, is a zigzag, you know, moves to the downside. And of course, you know, if it's a more sinister, we'd still have our 5 wave move down, we'd have our 3 wave move up, and then we'd have a much deeper, you know, kind of zigzag pattern, a much deeper 5 wave count to the bottom here, which would basically move past 1.618 of wave 1, and essentially indicate that we're impulsive down. And if this is the case, then we would obviously lose and go down lower than 17,622, and would probably, based on the scale of wave 1 at the moment, look to come down lower than these expectations of this wave 4 to wave 5 low. So I would say that 15,140 to 16,629 seems a little bit on the higher side of things if we are to see, you know, an impulsive move into a final 5th wave down lower. I would estimate that probably we're going to be talking about 14,000. That would feel a little bit more realistic, but it may be a little bit even lower than that. So it'll be interesting to kind of see how that plays out. I think for the most part, though, a zigzag here with 17,622 would be a pretty neat example of this, because then our bear market lows at 17,622, and then we can use some of the history that we already have with things like the Gaussian channel and those 10 and 20 EMAs, for example. They could be pretty interesting to kind of see how they play out, on how that history changes, because, you know, we are in a really small data set, so if anything is technically possible here to rewrite history and get some new principles, you know, put into BTC history here. So for the most part, that's kind of looking pretty good for Bitcoin. All of this being corrective, and we could be looking at, you know, something much bigger, right? So if we can stay above 17,622, then, you know, we could be looking at some kind of you know, diagonal move, maybe, you know, where we actually then move up really strongly in the next move up. So we end up with the 3 waves here, 3 waves down, maybe 5 waves up, then 3 waves down, then 3 waves up. We could have something like that. And obviously that would be taking us up significantly. Now, ultimately, our low points for invalidating any kind of idea of more downside are set up here at 29,218. Okay, that basically is this wave 1 area just over here. And so, yeah, we are kind of, you know, keeping a close eye on that. But for the most part, I think we are, yeah, doing okay here for BTC at the moment. So just wanted to kind of see how this one plays out. I would expect a little bit more room to the downside. So let's actually just drill back into this for a second here. So here we can see we have a clear kind of drop down, move up, drop back down. And if we bring the stochastic RSI, I think we got a little bit more room. You can kind of see it's just coming in now. Just to finish off a little micro 5 wave within wave 3. And then we should push up into our next move. So I would say that we've probably got a really small amount to the downside still to be had here. Let me just check. We kind of already met the minimum expectations, but we could probably go down to about $19,500, 19,600, something like that. And then, you know, from there really move on up, and the bounce upwards would be a little bit higher, a little bit more significant. So if I were to take this kind of low point just down here up to the top of our wave 3, we would be looking at probably a retracement up to about 20.5 maybe. There's a lot of resistance in this area, so this could be an interesting point for a bounce, and it would still be lower than our wave 1, so that would be aligned. And if this is the case, then I would say, and obviously there's a little bit of speculation here, our wave 5 might end somewhere around about here, which would put us at about 19,300 2015 down to the lower side of about 18,948. So, you know, we would potentially have something like that. So, and that would be where we would then actually bounce up from. Okay, so if I just remove those, zoom out a little bit here. So we'd end up with this kind of 5-wave count, and then from here, we would look to potentially, you know, move on up, which would be of significance. You know, I'd look for at least 50, maybe up towards 88% of that. But again, if it is a B wave move, as in it's a zigzag pattern, this becomes unpredictable. Okay. If it is a 5-wave drop to the downside, expect 50 to 88% retracement, and then follow that up with, well, whatever's next, just a zigzag, or, you know, a 5-wave drop taking us down into an impulsive trigger point on a slightly higher macro level. So that's kind of what's going on from the kind of the here, the now, and kind of what our expectations are on the shorter time frames. Now, if I come up and get rid of the stocks, come into Bitstamp and remove that, come up into our monthly, bring this down for a second, just bring this up. And what we'll do is we're just going to expand this out a little bit. I'm just going to recap a little bit on what happened yesterday. So let me just go ahead and just delete everything off of the chart and throw on the EMAs. In fact, actually, I don't need to do that. One sec. I can just hide the drawings and bring the indicators on. That's much better. Okay, so from here, back in 2015, we spoke about this area. Basically, we had the bear market low in January of 2015. In February, we got a cross between the 10 and the 20 EMA. And so that was an interesting point. No one would have really noticed this at the time. But basically, the 10 EMA crosses the 20 EMA to the downside. And basically, the month before was the bear market low. We actually traded sideways a little bit here before breaking on up. Then back in 2019, we had these cross as well, right? They basically, the bear market low was December 2018, and on January 2019, we saw a cross between the 10 and the 20 EMA in the same way that we saw it back in 2015. Now we take a look at where we are right now, and basically we, in June, had a low point of 17,622 according to Binance. On Bitstamp here it's 17,592, but this is USD versus USDT, so again slight variations in price. Now we are in July and we've got the cross between the 10 and the 20 EMA. So does this mean that last month's low was in fact the bear market low? Okay, this is what is kind of being spoken about a little bit. Obviously we don't know. It's not a guarantee. These are just, after all, glorified moving averages. We've only got 2 data points, right? So history tends to repeat itself until it doesn't. And essentially, you know, with such a small data set here, there's no guarantee that this actually means anything. But it's a point of interest that we're going to keep an eye on, okay? So it's not a given that, you know, we're in, you know, the bear market low is in and we're just going to ride on up. That's not what I'm saying here. What I'm saying is essentially there's a point of interest and we do not know whether this actually means anything at all, but it's worth noting right now and keeping an eye on it. If we start to see the right kind of structures appear, then it'll bring me a lot more confidence. But it's an interesting kind of point that I want to kind of keep an eye on. The same way that we kind of look at things like, you know, a 200 SMA, for example, and the EMAs crossing that we've spoken about before. So I thought it was an interesting one, worth keeping an eye on. Now, as I kind of come out of here, jump into our weekly, and throw our Gaussian channel on. And in fact, actually what I will do is hide those drawings again. So yeah, we'll just hide all the drawings. And the Gaussian channel, again, you know, from history here, you had the bear market low a few weeks into this turning red. Small pullback, bounce, then drops. Over here, we're into it, we pull down, we bounce, we drop a few weeks into it, a little bit longer inside the Gaussian channel than we were previously. We've turned red, we've pulled down, we've bounced. Are we going to pull back down one more time? Essentially, that's kind of where we are, right? Have we hit the bottom? Have we not hit the bottom, right? Because essentially we are in the red area. We've pulled back down pretty significantly lower than the Gaussian channel at this stage, in the same way that we had done the 2 previous times. Doesn't mean anything. Obviously, it is a small data set. The Gaussian channel has held up, considering once you close inside here, we has led us into a bear market. That's happened 3 times in a row, so we'll continue to monitor those situations. But essentially what we're now trying to do is figure out whether we've hit the bottom at 17,622 according to Binance, or whether or not there's actually a little bit more room to the downside. And really the next thing to do is see these micro movements kind of complete, move back up a little bit, drop back down, and see the scale of that drop, because I think that's going to indicate to us whether or not we are now actually thinking more bullish, or whether we start thinking a little bit more bearish. Okay, so lots of things to think about, lots of things to discuss, but essentially, yeah, I think Bitcoin is getting very, very close to starting to really recover from this downward price action, but time will tell what ultimately is going to happen. So guys, I'm going to leave the video there. If you have found this useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. With all that said, done and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.